Do you work with a financial advisor, or are you looking to hire a financial advisor and you know you need to be asking more questions, but you're not sure what to ask them or what kind of answers may come back? In this video, I'm going to share with you 7 questions you'll want to ask any financial advisor that you are working with or you're considering hiring. Hi, I'm Camille Gaines. I've personally invested my own money for over 30 years, and I share here what I have learned on that journey. I'm a bit of a nerd around this, and I love researching and learning about and investing. Now, in this video, I'll be sharing questions that you'll want to ask any financial advisor that you're considering. Let me mention also, I've created several free resources on my website. I'll put the link below. It's financialwoman.com, that will answer some of your questions that I've seen here and I've gotten from some of my coaching clients. So let me start with the 7 questions that you'll want to ask any financial advisor that you're considering. First of all, what is the dollar amount and percent amount that I'm paying for all of my wealth management fees? So it's not just the management fee that you want to get your arms around, but also how much are you paying in commissions? And I suggest that you ask in both dollar amount and percent, and here's why. 1% sounds really small, right? When I hear 1%, I think, wow, well that's cool. I get to keep the other 99%, right? It seems like a really great deal. But if you go, well, 1% is, gosh, that's $10,000 or $5,000 or $20,000 a year, well, that sort of changes the perspective. And I think it puts it into reality for you, and I think that's important. It feels more like you're spending your money on this, and you'll want to know where you're spending your money so you can make sure you're getting the results that you want for anything, right? Question number 2, are you a fiduciary? A fiduciary is someone that has to put your needs, the needs of the clients, that's you, above their own, needs or what they're wanting. So they have to think of their clients first and what's best for their client in recommending investments for you or investing your portfolio. You would think that that's a given, right? That a financial professional has to first consider what's best for their clients, but that's not the case. It's only the case with a fiduciary. And it simply means, again, that your needs have to be put first in the recommendations and the selections that are being made in your investment account. So super important question. These are all really important. Okay, the third one is, do you adhere to a very, very strict buy and hold strategy no matter what the stock market is doing or what the economy is doing? Let me explain this. Some advisors will have a set asset allocation. That means a percent they put in stocks and a percent they put in bonds, maybe a percent they put in, things like international underneath each of those categories. And regardless of what's going on, they really want to stick with that long-term percentage in each of those different types of investments. Other financial advisors are more, what I would say, tactical. They're more strategic. They think about, well, gosh, the stock market's been going up for 9 years, which, as is the case as I make this video, it's likely it will go down before it continues to go up for another 9 years. So I'm going to scale back, or I see the PE ratio is this much, or based on past valuations, I see that this type of investment is cheap, so I'm going to put extra money in your account into that type of investment. It's more strategic. So that's question number 3 is, do you adhere strictly to a really set buy and hold strategy no matter what, or are you more strategic based on what's cheap, what's undervalued, and opportunities that you are seeing for your clients? The 4th question is, will any of my investments go up when the other investments are going down? Let me explain. Investment types tend to move together. So for example, all stocks tend to move in the same direction. All long-term bonds, for example, of the same type tend to move down at the same time. So some investments will go up while other types of investments go down. For example, the U.S. stock market, when it's going down, let's go that way, when it's going down, then treasury bonds are likely to go up. That's simply because people want safer investments and they feel that U.S. treasuries are safer. So that's an example. That's what's called correlated. If they move in the same direction, they're correlated with investing lingo. If they move in opposite directions, then they're non-correlated. So a really valid question is, do you have me in some investments that will go up when the other investments are going down? I do want to point out it's hard to find non-correlated investments. Now it's gotten a bit tricky. And just remember, it's not easy to find non-correlated types of investments. The next question that I would suggest you ask is, what is the most that my investments will go down and likely to go down, right? Likely to go down in any given year based on the history of these investments. Of course, we don't know for absolutely certain. That's why with investing, we go with probability, we go with likelihood. We see what has happened in the past, and we look to that to say, there's a high probability that this is going to happen again, somewhere around here. So a very logical question then is, based on my investments right now, what's the worst case scenario in any one year if history repeats itself? That is something that you can learn about and get comfortable with and make a decision about, is this something that will work for you, and not be surprised or shocked or freaked out when the normal things that have happened in the past happen again. Super important. The next question is closely correlated with the previous question, and that is, what are the different types of risk that I'm exposed to, and how much will my investments decrease in value if those risks actually occur? So, for example, if the stock market, the bear market, stock bear market is a common risk that we all have if we're in the stock market, right? So how much has it gone down in the past? What's the likelihood of that happening? Another question might be related to something like inflation. So this is the thing that you're looking for your advisor to advise you. You don't have to come up with all the different scenarios of risk. You're asking them to explain to you the different types of risks so that you understand them. And knowing them, you can make better decisions about what's best for your investments, along with working with a financial professional that you trust if you choose to go that way. So it's about being prepared. And I don't know about you, but I know when I know kind of the worst case scenario that's most likely to happen, I can wrap my arms around that. It's like, okay, it's likely that this will happen again, or if I stay in this investment, this is probably going to happen, and I see that I could recover from that. So I can live with this. I can sleep at night knowing this. And when you know that and when you have that approach, it's not like the bottom has just fallen out from under you when these things happen that you've been explained, you know about them ahead of time. Your advisor has explained them to you in a logical way that makes sense to you and you can get comfortable with. The next question, and the last question, number 7, is, do you consider my overall wealth plan, or do you just focus on stocks and bonds as my way to build wealth? Most financial advisors focus only on stocks and bonds, but now I'm noticing more and more advisors that also pull in things like rental real estate or small business income, other elements of wealth building that are so important, especially now given the low interest and dividend rates that retirees are living with and investors are living with. So those are the 7 questions. I'll run over them really quickly again. How much am I paying in fees for wealth management? Total fees, dollars and percent. Second, are you a fiduciary? Third, Do you adhere to a rigid set of buy and hold, structure of buy and hold, regardless of what the market's doing? Or are you more strategic and tactical based on what's happening in the financial markets and the economy? Fourth, what is the most that my investments will likely go down if history repeats itself? Next, what are the different types of risk I am exposed to, and should any one of these type risks happen, or each one of these type risks happen, how much would the value of my investments probably decrease? And last, do you consider my overall plan or focus only on stocks and bonds? If you found this information helpful, I would just love it if you would let me know by clicking the thumbs up button in the lower corner of this video, and support this free financial education by subscribing, by letting me know you like it. Thank you. I appreciate your watching.